Hey guys, this is Graslow, and today I want to give you a quick update on LUX coin. In my last video, I talked about the coming fork, which was changing the LUX block rewards. Since then, the coin price has continued its decline. So I want to take a quick look at the main factors affecting the market lately. This is a personal video for me and should not be considered from the LUX Core team. Also, this video is for informational purposes only. Nothing I say should be taken as financial advice. Please do your own research. So what was this reward change and when did it happen? If you didn't watch my previous video, I'll drop a link to it in the description so you could go watch that. But I'll just highlight the changes that will have the most impact on the market. The block reward change took place on July 24th. It reduced the total LUX created per day by around 13.5%. It also reduced the total mining rewards by 37.5% per day. So it shifted some of those rewards to stakers, masternodes, and a newly created dev fund. I argue in the video that miners sell their rewards at a much higher percentage than stakers and masternode owners. So overall, with the reduction in mining rewards and also the total reduction in coins, we should see much less pressure on the market. So why has the price continued to decline since then? Shouldn't we be seeing less selling pressure? There's actually one major driver of this downward pressure. Yes, the altcoin market just sucks in general. Yes, Bitcoin has pretty much been range bound for the last few months. But there's another factor that's specific to LUX. Many in the community have watched a particular mining farm building a stockpile of LUX. Back in January to March of 2019, they mined over 200,000 coins and then they started selling them off over a period of time. Now they've mined back to about the same amount and they started selling again. Selling in bulk obviously puts a lot of pressure on the market. You see this supply create a lot of sell orders and just absorb all the buying pressure, and buyers are wary of putting in new orders because they think the price is falling. So this is precisely why many in the community, including myself, cheered for the reduction of mining rewards. We're seeing the benefits of that in the newly created coins. There's fewer coins overall and even fewer still going specifically to miners. But we still have to deal with the large stash of coins that this farm and other miners were holding. To be clear, I have nothing against miners or mining farms. And I think that anyone should be able to buy and sell at any time they want. So we're not passing judgment. Basically, we're just pointing out the activity so that we can analyze its effect on the price and explain why the price is doing what it's doing. So here is a chart of the mining farm's balance over time. The green line is their total balance. Each of these drops is when the farm is sending coins to their Coinbean deposit address. Using basic blockchain analysis, you can easily figure out where their Coinbean address is. So as of today, this mining farm is down to around 57,000 LUX left in their wallet that has not been sent to the exchange. We don't know what the future holds for their coins. We don't know if they're going to continue selling at the same rate or if they're going to hold on to coins. But the one takeaway from this is their total balance has come down quite a bit. And that's positive because these coins have been distributed to more holders. So another way to look at this is looking at the deposits to their Coinbean address. And you can see I've created a chart here of each of their deposits over time. And then I've also kind of lined it up with the Coinbean chart so that you can see what the trading was doing. It's not exactly correlated. And obviously when they make a deposit, there's no telling when they put in a sell order or how big the sell order is and how long it typically takes for them to fill those orders. But it just gives you a good idea of the pressure that the market has been under and why we haven't seen moves up when good news comes out or other factors come out, because we've seen these large deposits and this large supply that has been hitting the market. Coinbean's order book doesn't show a lot of data. You can only see a limited number of buys and sells. So I created a couple of pages on my website to pull from their API to show all of the orders that are out there for the exchange and also to pull recent trades. So if you look at this page, you can see a table with all the current bids or orders to buy LUX. you can see a ask table with all the orders to sell LUX. So on this page, you can see the recent trades, which is going to show you all the last few days of buying and selling for LUX, individual orders. And then you can see the daily averages. So you can see as far as buys go, what the total amount of LUX bought was, and then the average price that it was bought at. And then you can see the total number of LUX sold and the average price that it was sold at. One thing we can note from these daily averages and just watching the price action for the last several days, if not several weeks, is that it seems like the mining farm has a floor that they're willing to sell at. And it looks like 1,500 sats is about the lowest that they want to go. That's the lowest we've seen most of these larger trades go for. Here you can see a trade for over 9,000 LUX that took place today, where someone had put an order to buy 9,000 LUX, and presumably the mining farm sold into that. So if you are looking to put orders on the exchange, it's advisable to put orders to buy at that 1,500 sats mark or above if you want those orders to go through. I haven't seen many at all go through below 1,500 sats, only a few LUX, and that's just because of the low liquidity we've seen on the exchange. It's long been speculated that this mining farm is utilizing FPGAs. FPGAs typically produce much higher hash rates than standard graphics cards, but they have to be tweaked to work with specific algorithms. LuxCore recently announced that they're looking at switching to a new algorithm which may reduce or totally eliminate any advantage FPGAs would have. They're currently looking at RandomX, which is a new algorithm for Monero. LuxCore has said they plan on using their own blend of RandomX, so it's not just going to be a copy and paste of what Monero is using, but it's based off of that algorithm. And we can expect this as early as this month, but no firm date has been set yet. So I know they're hard at work on it and anxious to get this out. All right, back to the supply issue going to the exchanges currently. Obviously, this has created a lot of pressure for the market, and this explains why the price has went down and has stayed down for as long as it has. So where are these coins going exactly? The answer in many cases is to LUX masternodes. July 24th, before the fork, we had 147 masternodes on the network. Today, we have 164 masternodes. That's a difference of 17. So we have 17 new masternodes in the last few months. So just since the fork, we've seen 274,000 LUX locked up into the longer-term holders' wallets in the form of masternodes. Now, many more have been added to staking wallets, and of course, other longer-term investors are buying coins every day. But this is a really positive sign because these are coins that are taken out of the hands of shorter-term speculators, miners that have to sell to pay real-world expenses. Because when you mine, you have electricity costs, you have equipment costs, and these are coins that are going into longer-term investors who are betting for higher prices and wanting to see a long-term return on their investment. So I want to leave you with some key points. Most of the selling pressure lately has come from one source. These coins have mostly went to longer-term investors. We see that as the number of masternodes has went up steadily since the fork, and really since the miners have been selling. The mining farm supply is being reduced, and as their supply runs out, or if they stop selling, this could definitely relieve all the pressure from the market and help support higher prices. The mining farm, for now at least, seems to have a floor set at about 1,500 Satoshi. We don't see them selling below that, but they certainly could change that in the future, but that is definitely a point to watch. Mining rewards were reduced by 37.5%. So this is just temporary selling pressure because of this one source. Once this source runs out, or when they stop selling, we could see a lot of upside because we no longer have this selling pressure, and this is a permanent change. This 37.5% was a permanent drop in the number of rewards going to miners, and so it should be correlated with less supply going to the exchanges. A new algorithm is coming soon, which should help distribute the mining rewards to more miners, which is also good for the market because different miners have different time frames and perspectives, and you don't want all the rewards going to just a few sources who may all decide to sell at the same time. Some additional exchanges are on the way, namely Next is one that we're watching, and this could help with the market liquidity, provide buyers and sellers more venues to go to do their trading. And of course, we still have these amazing products ahead, which everyone's excited about. LuxGate, the decentralized exchange. We're expecting a beta to come out at some point soon. The distributed file system, or decentralized file system. Powerful tool for file storage, and is going to be the backbone for the next product, LUX Edge, which is sort of a decentralized alternative to GitHub for developers to be able to store repositories and make changes and share files on a decentralized platform, which doesn't have the censorship concerns that we're now seeing from GitHub. So these are the key points that I think we should be focused on today. So is this the bottom, or is the bottom just around the corner? Honestly, no one knows the future of the market. There are many participants with their own motivations and their own expectations. I'm personally lowering my cost average and expecting better times ahead, and I'm excited about the project and what the future holds, but there are no guarantees in trading. I hope you found this video informative and helpful. Thank you so much for watching. Let me know in the comments if you have any questions, and feel free to hit me up on Discord or Telegram. Thanks.